Hello, folks. Brandon Chapman with you today. It's another Monday video for TheoTRADE. It's good to be with you as the bullish pause has the bears lie in wait. So we have a scenario building today where the S&P rallied off the lows of the session, initially down and then up, basically finishing at the high of the session for today. Kind of unusual. Given the setup of the market. But the fact of the matter is that when you have selling like we've experienced, at some point you find the buyers. And who are these buyers? Likely buyers of last resort are short covering. And so the question is, are we seeing that in the most shorted areas of the market? So if we look at SPHB, the high beta parts of the market, it only finished up about 0.25%. So it's not like this was a stellar day for the bulls and seeing a major rally off the lows. Instead, what led the way? It was energy, engulfing Friday's candle. Materials, again, engulfing Friday's candle. So it was more what? It was more the dollar-sensitive parts of the market that showed strength today. Unfortunately, for these markets, the dollar was stronger today. And we can look at the dollar strength in terms of UUP, which was up 0.37%. This is predominantly the dollar against the euro. So if we look at the euro/USD specifically, this has a 57% weighting. So dollar stronger vis-a-vis the euro. Dollar stronger vis-a-vis gold. Because gold is priced in dollars, we're down about 0.5% today. Gold is essentially, if we consider it money, this has no value except as a medium exchange, except as a store of value. There's some economic uses for gold, but very few. And so the idea is if gold is down, the dollar's stronger by about 0.5% today. And so unusually, right, the dollar is stronger at the same time, the S&P is up about 0.4%. So if we kind of pair these two together, the S&P is approximately in real terms up nearly 1% today. And so we look at the SPY rallying off our lows, led by dollar-sensitive parts of the market that you'd expect to be down on a day like today, energy and materials. And materials, we're not talking about participation from gold stocks. I mean, look at GDX, for example, down 1.25%. So when you think about, well, what is rallying within materials, which, again, gold, mining stocks are a part of. So if I bring up my XLB top 10 holdings, this probably isn't perfectly up to date, but notice Dow, right? This is a materials, but again, it's also in forget the name of it, but it's a materials stock. We got NUE, which is a steel stock. We got Air Products. We got a Sherwin-Williams up today at 0.6%, whereas you got Newmont, which is the largest gold company, is down. And so again, we have these basic material stocks rallying, sans companies like, gold and silver companies. Then you got Albemarle down today as well. But for the most part, we've got chemicals companies, we got steel, we got Air Products in there as well. And so again, this isn't exactly like, the most stellar parts of the market that would suggest, hey, we're seeing a lot of economic strength, which we do have a final revision to second quarter GDP expected to tick up to 2.3% from that fall back we had in the preliminary at 2.1%. So we'll see how that shakes out on Thursday. We've got PCE. We got all this data coming up this week. And today we're seeing a rally. And all I can say with regards to this rally, it just looks like relief, right? This is a relief rally. Basically, you have shorts out there, people that have sold that are essentially covering today. And again, we're not seeing a lot of strength in areas you'd hope to if we're talking about high beta names like SPHB. It underperformed today. Let's look at SPLV, low volatility names. This was down 0.25%. So while it outperformed low volatility names, it wasn't the top performer today. We didn't see a rush to jump into those high beta names off of today's low. We're just seeing kind of the low hanging fruit of energy playing out much more positively. So I'm trying to find my sectors here, but SPDR ETF sectors. So energy was the leader today. Nice engulfing candle. And when you look at the term structure of oil futures, you'll notice this red line has steepened from late last week. That's the 21st. And here is the August 1st down here. in July 31st. Point being is that the trade in oil has gotten more in a steeper backwardation. Man, I'm stumbling today. In steeper backwardation, and as a result of more of an implied shortage, if we're considering the price or term structure of oil futures steepening from last week on the 21st. And so what this shows is that the risk is still to the upside in energy. So we got a pullback over several days, but we hung in on Friday, and today we're seeing an engulfing candle. We got kind of this stick sandwich going on, which if we take out today's high, we could see a nice run back to the highs of 93.50. And so some of the bearish activity we had last week as energy was selling off, now we're seeing things kind of flip and the potential narrative flipping and maybe seeing additional strength. The question is, does oil participate? So if we look at forward/CL, it actually finished lower today. And again, given the steep term structure, the backwardation in oil, we'd probably guess that the breakout is likely to the upside unless we see a much more significant turn in sentiment about demand in the future. But right now, as we look at energy, again, we'll probably have that overbought rally that we're experiencing today. And energy is probably the one area you'd say, look, this is the one area you'd probably expect to see some strength by virtue of what's happening in the oil markets and the undersupplied nature of things. Stocks like MPC, these are refiners, didn't finish as strongly. And this is one area where I'm expecting to see a little bit of weakness if oil rallies. I'm not sure gasoline prices or even diesel prices are going to keep up, even though Russia has discussed the fact that they may be pulling some of the exports of diesel globally, which may keep the spread between diesel prices and oil prices pretty wide. But other aspects of the trade, if you look at RBOB gasoline, RBOB's been taking it on the nose the last couple of weeks. Diesel probably holding up the trade here, but I am expecting to see a bit of a pause in refined products. This kicked off with some bearish trade in the space last week. Again, expecting somewhat of a reversal here, but stocks like Exxon that have more of a diversified or integrated product structure, they were one of the top performers in the dividend aristocrats in the S&P 100. One of the better performers in the S&P 100. Sorry, I'm going the wrong place here. They're one of the better performers in the S&P 500, along with the Dow, with Dow obviously here as well. But the idea is that ConocoPhillips up 1.6%. The more integrated parts of the market, namely Chevron, Exxon, this pullback could be the pause that refreshes, and we may see a nice run. But for the rest of the market, when I say nice run, maybe retesting our prior highs at 172 here on Chevron. Retesting the prior high in Exxon, if we look here, XOM, retesting prior highs up here between 118 and 120. So the point being is that this makes sense, right? But the rally in material stocks in XLB and seeing the selling in gold specifically, I mean, are we really in a growth phase? No, we're talking about an oversold rally. So maybe we have a chance of getting back to 79.50 on materials as a sector, and that doesn't bode well for the rest of the market. Maybe cyclical's got a couple of days here to 165. Point being, as we look at the volatility markets, it suggests that this is an opportunity to potentially reload. VIX is elevated at 18, but I'm considering the likelihood the VIX may head higher above 18. We can look at the VVIX here, right? VVIX has not yet reached 110, which typically accompanies more of a sell-off. When we look at the 3-month VIX against the spot 30-day VIX, we bring up a ratio called the pairs ratio. It's a study on the thinkorswim platform. The pairs ratio ticked up to about 1.06, meaning what? The VIX is 6% higher than the 30-day VIX. The 3-month VIX is 6% higher than the 30-day VIX. We're yet to get down here where the VIX is below the 3-month. Even last week's selling did not see the VIX go in backwardation. So if you look at the product depth here, /VX, so we know what backwardation looks like in oil. We're not seeing the same term structure for VIX, which generally accompanies market bottoms. Pretty flat here on the short end, but we're still trading above where the spot VIX is. Still looking at more potential volatility in the near future to help clear the air. And despite the selling, guess what's happened with SKU? SKU has held, and in fact, the last 2 sessions has risen. Thursday and Friday of last week. We'll get SKU again for today later. But the point being is that we're still very skewed at 137. What does this mean? It means that the hedges of buying puts and selling calls is still prevalent. They're not taking this stuff off. We're not seeing the massive selling breadth and significant selling at the bid, driving prices down. That has yet to really occur in a material way. And as a result, I'm not sure we're done yet in terms of the broader selling. The signal we got back here at the high on September 14th would suggest a 5 to 10% correction. We're not even there to 5% yet. So look at this rally as an opportunity to potentially go short again. Look for those areas that are more higher beta, like, for example, cyclicals and technology as an opportunity to reset. Stuff like, for example, ARK, which is heavily weighted towards Tesla. If we get a rebound here, it could be an opportunity to short. Even consumer finance stocks like Synchrony Financial, as an example, in the rally, look for an opportunity to go short. Nike, if we catch a bid here, earnings coming up, bearish activity on Nike. Anyway, so if we look at the one area of energy that's really played out strongly today is uranium. Uranium failed to take out the high in CCJ and UUU, but the canary in the coal mine is Treasury yields. Treasury yields ran and traded at the high of the session, selling off today. Again, this really puts pressure on the broader market. If this continues to sell off, at some point it's going to cause this to break, and that dollar strength is going to lead to material weakness in the market and across most sectors, and maybe even influencing energy. But in the near term here, looking at energy retest the high seems like a pretty reasonable expectation looking forward over the next couple of days here. Anyway, that's all for today's video. You have a great one. Catch you back next week. Thank you.